Okay, let's turn now to today's business news and look at how the markets have been reacting to the British MPs voting down that EU withdrawal deal. Our business editor Stephen Carl is with us for that. Stephen, what's been happening?
Well, currency traders, of course, had been watching very closely for the outcome of that vote on the withdrawal agreement in Westminster, and in particular watching closely for the scale of the defeat for Theresa May, because, of course, we had been expecting this to be defeated even before the vote had taken place. Now, there weren't any major surprises in the end, at least in terms of the result. So what we had was more of a blip than a major move on the market. So we had sterling against the dollar here, you can see, falling slowly before the vote. There was this sharp drop immediately as the vote happened, but a very quick rebound afterwards. We had sterling fall to its lowest level in 2 years of around $1.27 before rebounding, as you can see. And in trading today, sterling pretty stable against the dollar and the euro, with £1 trading for just about $1.28.5 and just under €1.13 as well. So to try and help us unpick all these latest developments, we can go now to London and speak to Craig Erlam, Senior Market Analyst at OANDA. Craig, thanks for being with us. Can you first of all explain to us why we saw what we saw last night? There was this sharp drop but a rebound almost immediately once the result of that the vote came through.
Yes, I think one thing which we can safely say about currency markets is we do tend to get the quickest reaction to these events. The flip side of that is we can also get irrational reactions. In the lead up to the vote, it looked as though Theresa May was winning some of more Eurosceptic MPs. That seemed to benefit the pound. Then in the immediate aftermath of the vote, a crushing defeat, as we've seen, the worst defeat in Parliament in more than a century. This was seen as a sign that Theresa May's deal doesn't have much hope. Then you're seeing in the immediate aftermath, she's reaching out to the opposition benches, trying to open the discussion to try and get this vote through the door. Again, we're looking at this situation right now, and we're saying if she's reaching out to the opposition benches, as opposed to her own Brexiteer backbenchers, then that would suggest that she's opening the door potentially to a softer Brexit deal, which the European Union can get on board with and can potentially command a majority in the House of Commons, and then the pound rallies back. But ultimately, it feels like we're back to where we began. The pound is roughly trading where it was 48 hours ago, despite all the volatility which we've seen in the interim.
So the next big event is going to be that confidence vote in Parliament later today. How are we likely to see the markets interpret that?
I think that the markets are going to look at this as nothing more than a process. I think this is something that Jeremy Corbyn had to call for two reasons. One, he's been threatening to do so for such a long time now that to not follow a devastating defeat yesterday with it would have been seen as a sign of weakness, a sign that he doesn't fully believe what he has been saying for so long. The other side of this as well is he needed to do so in order to move on to other options. He said at the party conference that the first thing that the government will push for is an election, and the only way for them to trigger an election is via this no confidence vote, because calling for an election in Parliament will require more than 2/3 of the vote. This only requires more than 50% of the vote in order to result in the collapse of government and trigger a general election potentially in 2 weeks' time. So this was the only option on the table in order to get there. Once this is out the way, they can start to explore other options, including a second referendum, of which there is support for within his party.
So does it look like, from where you're standing now, that we're further from a no deal than we were this time yesterday?
Not necessarily from this time yesterday, but we are further from no deal than we were a month ago. And the simple reason for that is there is a strong majority in Parliament against a no-deal Brexit. I think at the last time of checking, it was more than 3/4 of MPs in Parliament are against a no-deal Brexit and will do whatever it takes to avoid it. For this reason alone, the no-deal Brexit seems an unrealistic possibility, for the simple reason being that even if we get to March 29th or whatever deadline it's extended to thereafter, and no deal is looking like the likely option, MPs have the ability to withdraw Article 50 at any stage and cancel this entire process. And with that in mind, I see no situation developing right at this moment in time where we get to the deadline, MPs go for no-deal Brexit despite the fact that they don't want to, and the EU allows it to happen despite the fact that they don't want it to happen.
OK, Craig Erlam, Senior Market Analyst at OANDA, thanks for joining us from London. Of course, the markets will be following all of those developments very closely. as things move on in London. We'll take a look next at what's happening on the stock markets for you. Asian shares not seeing any dramatic movements today. We had that big rally, of course, yesterday, prompted by fresh hopes of stimulus from China. Today, the picture much calmer. The Nikkei in Tokyo finishing down 0.5%, but Shanghai and Hong Kong and the Kospi and Seoul just nudging into the green. We have had the Chinese central bank pump billions into the banking system in order to promote lending. That's the latest development from the Chinese side, but not quite enough to provoke a reaction on the markets just yet. Of course, we will be watching the European Open for you in just under an hour's time. Moving on, the French government is reportedly working to remove Carlos Ghosn from his position at the top of Renault. The state is the car maker's biggest shareholder, I should say, and the Reuters news agency says it has requested a board meeting for this Sunday to consider candidates to replace Carlos Ghosn. He's been in custody in Japan for almost 2 months, where he faces financial misconduct charges at Renault's partner Nissan. Until now, the French government has supported him, leaving him in the role of chairman and CEO of Renault while he awaited trial. Netflix is to increase prices for its users in the United States by up to 18%. It's the streaming service's first price hike since 2017, with the monthly fee for its standard plan rising from $10.99 to $12.99 a month. The increases will help to bolster Netflix financially as rivals including Disney join the streaming market. Users in some Latin American countries where Netflix is priced in dollars will also be affected, but so far no change in prices have been announced for other users around the world. And finally, for me, imagine getting a new job and then being told 4 months later that you're simply too expensive to hire. That's what happened at the Spanish bank Santander. It selected Andrea Orcel last September to become chief executive, but the bank has now withdrawn its offer after it emerged that it would have to pay as much as €50 million to reimburse Mr. Orcel for the shares that he'd earned while working at the Swiss bank UBS. Santander's executive chairman, Ana Botín, says that they had to balance the respect for their millions of customers and shareholders with the significant cost of hiring one individual. Eve.
Hey, Stephen, thanks a lot for that business update. Stephen Carroll there.